Welcome back to another episode of With Sonar. I'm your host, Luke Falasca. Of course, rejoined by Tony Mulvey. We've got a great lineup today. A lot of things happening. We're going to be talking about some earnings with J.B. Hunt, what's going on with that sector. We're going to sprinkle in a little bit of air data, and we're even going to look a little bit about a potential stabilization or short-term bounce in the freight volumes market. So could be a little sign of relief for the carriers out there if this is some stabilization, but we'll get to that. First, Tony, thank you for filling in for me last week. I was very busy on a very important related activity, so I couldn't be here.
Yeah, nice to have you back. I mean, had to try to fill in for you. It's tough shoes to fill.
They are. It's very, very big shoes to fill. I couldn't agree more. I mean, that's they don't pay me the big bucks for no reason.
Exactly.
Yep. So they don't actually pay me at all for the show, but that's beside the point. Point is, we've got it's earnings season. I think about 20% of the S&P reports this week.
Your guess on that is as good as mine. I know, I mean, obviously, yeah, and then you look at...
We're in earnings season.
Yes, it is here, especially in freight. I mean, J.B. Hunt kind of marks that kickoff. Yeah. I know Martin and Delta reported Monday and then Delta last week, but J.B. Hunt kind of marks that kickoff point for earnings season. And then from here, it is busy time for like the next 2.5 weeks, 3 weeks.
Now, we've been hearing a lot about, and talking about the freight markets, all the indexes are pointing down and continuing to point down, yet we might be seeing some surprise earnings that are actually better than expected from some of these large carriers that are out there. How can we interpret some of that, for those that maybe are either smaller carriers or even some shippers that are in this current down environment?
Yeah, I mean, the important thing to remember, a lot of these carriers, they're under contract rates. And if you look at contract rates, right, we talk about this spread between contract and spot rates. We always cite spot rates. Yeah. But that's because they leave contract rates by that 60 days. So what is that, 2 months to, we're talking now almost 9 months. And you're still really not seeing it completely roll over just yet. I mean, you probably won't see that happen until first quarter when bid season's going on. Shippers will be able to be a little more aggressive, not wanting to disrupt their networks during the holidays. But I think that's what you'll see you have to take into account is that a lot of these carriers fall under contract rates, and those are still elevated year over year, whereas those that are more spot exposed, they're going to be the ones that are hurting the most.
Yeah. No, that's a good point. So, we're still year over year positive on the contract rate environment. Signs are pointing towards that's ending. Contract rates are down about 7% off their peak, but that peak was also hit this year, so we're still a little bit above. Want to dive in though. It's been a lot of down lately, but it seems like we got, if nothing else, a short-term bounce in the freight volumes market. Let's go ahead and throw this up. This is our OTVI chart or outbound tender volume. For folks that are familiar with the show, this should be very familiar with you. This is simply just the total volume. This is a great way to gauge the demand in the U.S. truckload market. So that's the blue line. The really big sharp dips followed by a great big recovery if you're new. Those are holidays, very seasonal. We pretty much push those to the side. But overall, this trend is really, really down. However, last couple days, Tony, a little bit of an uptick there.
Yeah.
Should we think about that at all?
Yeah. This is one, if you were to look back throughout the past few years, we always kind of circle October 15th. That's like the date to kind of always keep in mind when you're starting to think about, we've got the fourth quarter. That means peak season on the truckload market. You see that October 15th date is kind of that day where you start to see volumes start to pick up, right? Like it's kind of like the unofficial kickoff to what the fourth quarter is going to be. And when you start to see that move higher, it's obviously a positive sign. How peaky is it? We'll find that out in a few months. But you're starting to see signs of, hey, there is going to be at least a little activity, right? We're not going to be declining. But, if you look at it, look at where we were, say, mid-September. Well, look at Labor Day, right? That last dip big dip we see, and then it rebounds really sharp. But then we fall off pretty significantly from there. So, even with the uptick right now, we're 4th of July, holiday numbers. So yes, the uptick is a good thing, but you have to remember it in context it's still depressed compared to where it's been especially compared to this time last year.
I would just like to take a moment and point out that Tony said peaky. I don't know if that's a word, but it now is. So that was great, by the way. But in all reality, yeah, you're right. Well, I think too. Let me just. I'll try to provide a breath of fresh air for just a minute, especially for a lot of the carriers that are out there, right? There's been a lot of bleeding, and in order for us to get back to where we were or back on a bull track, should we say, the bleeding has to stop first, right? Now, there's still a lot of damage that happens, right? We've lost a lot of blood, and we can obviously see that in the chart here. But if this is the bottom, maybe it is, maybe it isn't, we don't know. Time will tell. If it is, it still could be a really long journey. And it's the same thing with the stock market, right? Yeah. The NASDAQ, I think, is down like 34% or so. The bottom could be in, but it could also take 3 or 4 years to get back to the top. We don't know.
Yeah, and I think that's the key to remember. I guess my only concern with calling this the bottom is this is the time where freight should be moving. Like this is that peak season for freight. What happens in the first quarter, right? Obviously if you look last year at that same chart and this year, the first quarter of this year, it's kind of like an anomaly for the first quarter. Typically, you see volumes kind of decline in the first quarter. Not really a time-sensitive thing. Then you get into like March, April. I think shippers getting ready start moving stuff for the summer rush. And this year it was kind of different. You saw a lot of stuff moving there during the first quarter, and then we saw the decline in volumes. How is that going to play out in the first quarter of next year? I don't know, but I think my concern is that we go into, we may see an uptick in volumes now for the fourth quarter, but what's the first quarter really look like?
Yeah, that's a great point. Time will tell ultimately, right? Yeah. And a lot of it comes down to the consumer, right? Of course, industrial manufacturing is still fairly tight right now. But you look at the retail sector; it's really loose, and that's, I think, causing a big decline here in some of this. Some of the sectors within industrial are declining. Right, we've seen that a lot. Flatbeds definitely taking a hit. So some pieces of the market are declining, but it's that a lot of it is definitely going to rely on the consumer and see how they bounce back. Yeah,
and when you think, if you remember back, that's what caused a lot of this uptick in volume was the consumer. Right. So it's no surprise to see it moving down. Like you said, the industrial market still, I don't want to say strong, but it's stronger than maybe what the consumer market is. Yes, you're still seeing retail sales, headline numbers still okay, right? It's not like spending's just gone away completely. Consumers are still spending money. It's just they can buy less, and they're putting more on their credit card, but you still haven't seen the impacts of if they're overextending themselves yet.
Yeah. One challenge too is, right, and this is where you get into a lot of price inflation, is consumers could, in theory, spend more dollars, but there's less freight to actually move. Yep. Right? If they transition that spending to services, or if that same dollar can buy now, let's call it 20% less goods than it did 2 years ago, right? That's 20% less goods that we now have to move. So, and that's definitely the concern. So, I do want to make a quick note though, and we're going to flip over this. So this is the outbound tender volumes. This is total volume. This is the chart you look at to see total truckload demand. There's another chart that we've released that I know a lot of folks have talked about recently. It's kind of been trending a little bit. It's caused a lot of confusion. It's our contract accepted load volumes. We'll pull that one up on the screen here real quick. There it is right there. We never talk about this one on the show, Tony, for a multitude of reasons. Number one, these are contracted load accepted volumes. This is not a proxy of demand. It might give you a part of the picture of demand, but it's not overall demand. All this here is really showing is where overall demand, or really where contracted accepted volumes are. So in theory, contracted accepted volumes could go up when overall demand is going down if rejections are really high. And that's sometimes what we see here. So this is not a picture of demand. It's purely a picture of whether carriers are relying more on contracted freight versus spot freight.
Yeah, basically, if you think of OTVI, this basically adjusts for rejection rates. Yeah. If you start to think we're at rejections right now are 4.5%.
Very low.
It just shows, if you think of what OTVI is, right, as a whole, it includes both accepted and then those that are rejected. Well, if there's less rejected, guess what? I mean, it props up this value, right? So especially, it doesn't, I mean, as long as those rejection rates are, I would say, falling faster than what OTVI is, that's what causes this to
Which
increase.
is partly why we saw contract accepted volumes so much higher in 2019, significantly higher in 2019 than they were in 2018. It wasn't because 2019 was so much better of a year from a volume perspective. I think we all know what happened.
Yeah.
It's purely just because they were much less reliant on the spot market. So a lot of that volume went to contracts. But anyways, for if anybody was concerned, this is, I know a lot of folks were talking about that. It's a newer index that's been released. That's ultimately what it is. But anyways, we'll come back to that. We're gonna we got to shift here. We got to talk about earnings. I know we talked about that a little bit, and we're going to come back to that. We know the market is down, and but there is still opportunities, and I think we're still seeing those, especially with the bigger carriers. They're still performing well. They might have some harder times in early 2023, but right now earnings are still strong.
Yeah, I mean, this kind of goes into what we talked about last week on the show. I know you weren't here, but I mean, we were talking about shippers kind of in this.
It's a little jab. You weren't here.
Well, we were talking with Andrew Leto about kind of like the RFP cycle, right? Typically, it was in that annual RFP. Shippers now are a little more accepting of, hey, let's go 3 to 6 months because we don't be locked in paying really elevated rates. Well, carriers are kind of on the other side, like they want those high rates, so there's effectively auto accepting things. So it's like, that's why these big carriers, right, they're not going to push. They know rates right now are good. They don't want to go play in the spot market. Like, I think that'll be what's interesting to hear is how these big carriers, their mix of spot and contract freight, how it changed in Q3 compared to maybe the second quarter.
Yeah, no, that's a great point. We'll probably have seen it go down. I mean, if we look at tender rejections right now, I mean, throw this up. You guys have seen this before. If you follow me on LinkedIn or Twitter, you'll have seen this before. This is where tender rejections have tracked over the last 5 years. We're 4.5% today. We're at the fourth lowest point it's ever been in history since the index started. I mean, we're lower than we were this time in 2019. Now, for those that are new, this really tracks how capacity is interacting with demand. The lower that green line, the looser capacity is, the less options these carriers have to pick.
Yeah, and I mean, we're seeing it right now. I mean, lower than it was in 2019. I think that's the concerning part. I mean, were the 20+% rejection rates we experienced throughout the past 2 years, I mean, I say past 2 years, but 2020, 2021, and then early parts of 2022, it just wasn't sustainable. I mean, the reason they were so high, contract rates are slow to react. And because there was so much volatility in the market, you just didn't know what was actually going to happen. And I mean, it's an indicator of spot market activity too. I mean,
it's true.
So when you see rejections this low, less loads flowing through to the spot market, right? And with rates coming way down in the spot market, I mean, I think I looked today, the NTID, so that daily value's the lowest it's been, I think, at least in the past year. I mean, you're talking, I think it was at $2.58 this morning. Yes. So, I mean, that's the all-in rate. That's way off of where it was at the beginning of the year, right?
Yeah.
Carriers aren't wanting to play around in the spot market. That's why.
Very little incentive.
I mean, that's why you're seeing this at 4.5% is there's no incentive to reject a load. The only reason you're going to reject it now is because you don't have capacity the capacity's not either in the right spot or you just don't have it available. I mean, it's not because you're chasing higher rates.
Right, absolutely. Now, to pivot for just a second, Tony, are you a college sports fan?
Big time.
Tennessee?
Big time.
Yeah,
I mean, I'm an alum, so.
I thought you might be. So, Tennessee, right? First time beating Alabama in 15 years?
15 years, yeah.
It's a big deal.
2006. Well, I guess 2006.
I'm assuming you watched the game, right?
I did. I wanted to go, but, you know, Little pricey.
Yeah,
Little
I
pricey.
imagine so. But it was a good game.
It was great.
Tennessee came out swinging.
So-
And then Alabama started fighting back a little bit, made it pretty close.
Yep. It's just give and take.
Give and take.
Give and take.
That field goal at the end, that make you nervous?
I was little is probably an understatement. So, but it's great. I mean, just to see it happen, I was getting to the point where I thought I would never see it happen again, and we finally did it.
That's a game. That's one of those games like you watch, and it's like people are going to talk about this game. Like that's the game that people talk about years later.
Exactly.
It's definitely one of those. So what's next for your Vols?
Homecoming.
Yeah. They got Georgia coming up. That's
3 weeks.
A couple games, but that's their next big one, right?
Well, they've got Kentucky. And if you want to call Kentucky big, they are ranked, but they've won like 3 games in the last 30 years. So.
I was going to say I'll concede that they're ranked, but
It's
really,
not Georgia.
Really, it's Georgia, right?
Yeah, it's Georgia.
I mean, if they beat Georgia, it's like they could have a perfect season.
Yeah, I'm not going to get into that because
they could.
I'm
not a college football fan.
Hey.
I appreciate it. Appreciate what they do. So
I gave my hot take on Freightonomics a few weeks ago, saying that Tennessee was going to go 10-2, and now I'm going to look dumb when they go 12-0.
We have a little picture here of Tony that we took after Tennessee won. I think we're going to throw it up here real quick, aren't we? No, it's not working. Okay. Okay. Anyways, but no, I'm happy I'm happy that your Vols won. It's nice to have a win.
Yes.
We'll pat on the back. A lot of people. I mean, we're here in Chattanooga, Tennessee. There's a lot of happy people here at Freightways.
Yep.
A lot of happy people here at Freightways. So, glad you were able to get that one. I tend to gravitate a little bit more towards pro sports. My Phillies are still in the playoffs somehow. Eagles.
Don't tell Kevin Hill you're a Phillies fan.
Eagles doing well. Just saying. It's good. It's a good year for Philadelphia sports. After this year, we'll probably have to wait another 30 years for it to be good again. But we'll take it while we're here, okay? We'll take it while we're here. Anyways, that's awesome. So let's talk about JB Hunt. JB Hunt, 45%, I think, of their revenue comes from intermodal, correct?
It was 48.
48?
This
Okay.
quarter, yeah. So,
All right.
60% of their operating income. So
60% of their operating income. That's important. All right. Let's figure out why. Throw this chart up on the screen for us here real quick. This is intermodal volumes. Look at this. This is actually, you couldn't really plan this chart much better. So I think this intermodal volumes are not nearly as volatile as everything else, right? They don't have the same volatility of ocean or of truckload.
Yep.
Which is, I actually saw somebody online, they commented on the article. They tweeted about the article after JB Hunt crushed earnings, and their comment was, intermodal is JB Hunt's cheat code.
Yeah.
And it kind of is.
Yeah, it really is. I mean, it's one of those, I've talked about it before. They kind of have this, when the freight market changes, they're kind of in that perfect position because they've got a growing brokerage arm. Like, that's been their focus. Well, guess what? Intermodal is still their bread and butter.
It's the cash cow.
Yeah, it is. And it's a lever that they can pull. I mean, they have multiple levers that they can pull that flow together in the domestic transportation networks really well.
Yeah.
And I think what's interesting is if you pulled the average of our domestic outbound rail volumes, if you pulled the average from this year, from the third quarter, compared it to 2021, we're up right around 4%.
Right. Well, you can even see that here on the chart, right? That really dark blue shaded line is this year, and then that light green line is 2021. So they're pretty much the same today, and that's as the time of this chart. So that's 10/19. But if you look back over the last 3 months, that blue line is elevated a bit more over top of the green line. So there's definitely more growth this year than 2021.
Yeah. So you're looking at 4% in this chart, about 4% volume growth. What do you think JB Hunt's intermodal volume growth was?
This is, I have to think.
Kind of a trick question.
Well, it is kind of a trick question. I know they are very exposed. I know one of their biggest lanes is LA to Chicago, and LA hasn't done very well right now. So I'm gonna undershoot it a little bit. I'm gonna say 3.5%.
No, 4%.
4%.
And you know why? Because
Right
they
on the
grew
money.
on the East Coast. So their Eastern network grew 7% year over year. Where those transcontinental moves, right? So LA to Chicago grew only about 1%. So I mean,
So my theory was right,
yeah,
but I didn't execute.
yeah. So I mean, it kind of just shows like we could have gone into you could have looked and said, okay, makes sense.
Yeah.
Their brokerage volume, truckload volume was down 1%, but their overall brokerage volume is down like 8%. Well, guess what? If you start paying attention to some of the data, it's showing that, hey, that's how this all works together. You can see how when they report earnings, you can kind of tell what's to come.
This is where, so basically, you're saying to go long on JB
I'm not saying that at all.
That's exactly what you're saying.
I'm just saying, I was pointing out
Tony
what
said,
is probably a coincidence.
Sell your home, liquidate all of your assets, sell a little bone marrow if you need to, and go all in on JB Hunt because they have because they have an intermodal hack. Now, obviously, total joke, but if it wasn't, would be a good strategy. It's right there in Sona.
Yeah.
But it is kind of funny though to bring it back for a serious note that. So 2020 did overshoot a little bit. That was when a lot of truckload capacity was taken out and we had a big surge. So they had to pick up the volume. But I mean, look at that crossing point. I mean, really, today, 2021 and 2019, on October 19th, are almost all identical.
Yeah, and I think that's what's going to be interesting over the next few months, or the rest of the quarter, right? Is how does the intermodal play into this? Because if you think the peak season for intermodal is earlier than maybe what it is in truckload, because the time-sensitive nature of moves, well, right now, retailers are so overstocked on inventory.
Yeah.
Like, is that time-sensitive nature there? Does it allow for intermodal to continue to grow during this period when, hey, peak season would be typically ending here in a few weeks? Or do we see it pivot from intermodal into truckload closer to the holidays? That's going to be what I want to pay attention to.
Yeah. No, it's a great point. I mean, we're definitely in this odd time right now. I mean, we're still dealing with the bullwhip effect. I mean, it'll be interesting to see how it plays out. But I mean, JB Hunt and even I think Schneider as well, to an extent, are very well positioned.
Yeah.
This is a great lever to pull from.
And I would say this, I mean, and it's not just JB Hunt. I bet when you see Knight Swift, their shift, right? They've made the shift. They have some intermodal, but they shifted during the pandemic to add an LTL offering to their business. Like the companies that JB hadn't make this shift during the pandemic, but they have these different levers that they can rely on that allow them to move, to be kind of positioned for these changes in the freight market.
Yeah, no, spot on. It's definitely interesting to see where it's all going to line up. One thing that I'm very interested for and is to see really how some of these companies, these larger companies, pivot. Like what business units. I think there's going to be acquisitions next year. I really think there's going to be acquisitions next year, and I'm curious to see which business segments they try to acquire. Like, does JB Hunt say, like, yeah, like we're really leaning on intermodal right now, but we're going to expand truckload while it's down? You know, does Knight Swift come out and say, hey, we're actually going to continue to expand LTL, and buy LTL companies? That's really where my eye is next year.
Yeah, especially when you think these companies did make a lot of money. They have cash on their balance sheet, right? They didn't really grow their fleets.
No.
I mean, I think that's the big difference between 2018 and what we've seen was they didn't overshoot.
A lot of new fleets came into the market. It was a lot of smaller fleets now as opposed to 2018. It was these big fleets adding their trucks.
Yeah, and then people went out on their own and all that.
Yeah.
I mean, it was just one of those kind of a perfect storm then. Well, now they're like, we don't really know what's going to happen. Pandemic kind of helped them probably by not going out and growing their fleet just crazy. And that's where I think they're kind of flush with cash. Like you said, I do think the M&A market should probably be pretty hot because they have the cash. Granted, if they had to go use debt, the debt's going to be a little more expensive because interest rates have gone up.
Right.
But I think what you may see is that sellers, it'll be a kind of a buyer's market because people will be trying to be like, I want to get my money and get out.
Definitely going to be a buyer's market. Also, don't forget, if you haven't already picked up your tickets in Chattanooga, just F3, this is just 13 days away from now, we kick off F3. So the Future Freight Festival is going to be here in Chattanooga. It's going to be a great event. Make sure you come. You'll get to hang out with Tony and I. Also, we are hosting with Sonar at the event, and we will have a client panel. So you'll actually be able to hear from some of our clients. JB Hunt will actually be one of them, along with a handful of others. So be sure to tune in for that, and we can. It'll be a great time to see everybody there and kind of hear from not us for a change.
Exactly.
But anyways, that's the end of today's show. We'll see you next week live, 3:30 p.m. Have a fantastic rest of your day.